starting with single column cash book. Now students, here is the format of single column cash book. Again, the format is almost similar to a ledger. In a ledger, there are two sides. One is the left hand side is the debit side and the right hand side is the credit side. But here only one additional feature is there, that debit side receipts is mentioned at the top and on the credit side the payments is mentioned on the top. Rest everything is same. Date column, particulars, ledger folio and amount. Then we have date, particulars, ledger folio and amount. Now students, let us make a cash book for these four transactions mentioned here. Now the first transaction that we have is on 1st January 1995, balance in hand. Now students, what does this imply? It implies that we have a cash balance of rupees 1 lakh in our hand from the previous accounting period. So now cash is an asset. Like all assets, cash has debit balance. So it is debit balance. So now on 1st January 95, to balance brought down 1 lakh. Since it is debit balance, so it is put on the debit side. Now the second transaction is on 2nd January 1995, that is paid to Ramlal. In this case, cash has been paid. Since cash has been paid or the payment has been made, it will be appearing on the payment side, and the payment side is the credit side. So on 2nd January 95, by Ramlal, amount is rupees 25,000. Again students, since in this case the payment was made, the entry has been made on the credit side. Now coming to the third transaction, that is cash sales. Now by cash sales we mean goods sold for cash. Since the goods are being sold for cash, it clearly implies that we will be receiving cash. Now we are receiving cash, so the entry would be made on the receipt side, and the receipt side is the debit side. So it will be to sales account and the amount would be 50,000. Do not forget to mention the date here, which is 5th of January. Now students, coming to the last transaction that we have, paid wages. Again students, it is paid wages. Payment is made in cash. Now since we are paying something, the entry will appear on the payment side. So here the entry would be on date of 6th January 1995, by wages, 10,000 rupees. Now students, you must remember that the postings that we have done in a cash book are just like that we do in ledger accounts. The only difference that we have here and that is visible from this cash book is that only one part, that is the one relating to cash, has been recorded. The other part of the transaction would be recorded in the respective accounts of Ramlal, wages and sales, which is not shown in the cash book. Obviously they will have their respective accounts which are shown on different parts of the accounting books. So in cash book, only the transactions which involve inflow or outflow of cash are recorded. Now assume that there is a transaction, something like purchase goods from Ramlal. Now I'll add a new transaction, purchased from Ramlal. Purchased from Ramlal, goods worth rupees 20,000. Now students, in this transaction, there is no inflow or outflow of cash. It clearly is visible that goods have been purchased on credit. Since goods have been purchased on credit, there is no inflow or outflow of cash, so this transaction would not be recorded in the cash book. So now, once we have made all the transactions, let us total it out and find the balance. Remember, the balancing of cash book is done just like ledger. So let us total the debit side. The total comes to 1,50,000. And on this side, the total is 35,000. So 1,50,000 minus 35, we have balance carried down as 1,15,000 and the total is 1,50,000 on both the sides. On last date, the date would be last date of the month or the week for which this cash book has been prepared. And in the beginning of the next accounting year, you must show this as a brought down balance. To balance brought down 1,15,000.